Hello, good morning everyone, and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec. Tuesday the 9th of July. We've got a continuation of this dollar move, this strengthening dollar that we've had in the wake of the payrolls report on Friday. The stronger than expected payrolls report just meant that the market had to reprice expectations for rate cuts from the Fed. Previously looking at possibility of even 50 basis point rate cut in July, being just reduced now down to 25 basis points, but that certainly has helped the dollar jump higher. You can see that move on Friday, and actually continued yesterday and again early morning today. You can see the fact through treasury yields, which are higher. 10 basis points actually off the lows on Friday. This is always an interesting chart, the fact that the Bund under US Treasury yield spread falling away, so a widening spread between the Bund and the Treasury yields tends to put downward pressure on euro dollar, and that certainly seems to be the case at the moment, and you can see that here today with euro dollar another 10 pips lower. Dollar is strong across the board really. Sterling the main underperformer, as is the Australian dollar. As we can see that US dollar strengthening across the board. Interesting move on dollar yen, 108.80 I might add. A close above that would be an interesting technical breakout, and I'll talk about the implications of that. We've also got gold back lower, another $2 lower. Fell under $1,400 again on yesterday's session, and again today it's drifting away. 1381.50 was that key July low. Again, I'll talk about the technical implications of that. Look at equity markets underperforming on the DAX, but also pretty much a lower across the board. Across the board lower means the fact that we've got this the Fed the repricing of Fed expectations of cuts. So subsequently, equities are coming lower, because there was a big rally back in June on the back of expectations of all these Fed rate cuts that were going to come down the line. Market just unwinding some of that move. Not yet showing too much on the S&P 500, but we've got 1.3% lower on the DAX today, below the breakout of 12,440. Interesting move there. So lots going on markets today. We're actually looking out for the congressional testimony of Jerome Powell tomorrow, so maybe just a continuation of this recent trend today, but tomorrow I think will be the key move that we see in the markets on that congressional testimony. But in front of that, certainly some interesting moves nonetheless. We do also have a couple of Fed speakers today. Fed's James Bullard, who is he's the main dissenting voice on the committee, very much dovish, called previously for 50 basis point cut, actually reined that in a speech recently, so it'll be interesting to see how he puts himself out today. And we've also got Randall Quarles, who is basically a centrist on the committee. So chart today is the Kiwi dollar. Now, interesting move. We had that big sharp rally on the Kiwi dollar in mid-late June. And you can see that move unwound to what I will zoom out to be a long-term pivot line. Look at this pivot between 66.85, 67.20. So basically around 40 pips of pivot band. All these key turning points coming within that band. Again, we saw a rally in early June, failing. That rally again, late June, failing at the top. And we saw posted a bearish engulfing key one-day reversal, bang to the downside, mark the top. Again, a failure, lower high at that level, 67.20 area. To the downside, we're now posting lower highs, lower lows, momentum indicators falling away, stochastics negative, bear cross accelerating lower, bear cross on the MACD lines, RSI under 50. Tends to go back towards or below 40. So there is downside potential in this move. We're a day low at the moment. So intraday rallies on the Kiwi dollar are being sold into. You've got a little downtrend in the last few days that you could take note of. Certainly configuration is negative on the hourly MACD lines, hourly RSI as well, failing at 60, going back to 30 and below. And it all suggests selling into strength on this Kiwi dollar chart here. So you've got a pivot line, you could argue, well, it certainly is a pivot line around 66.50 mark, marked yesterday's high before the market fell back over again, fallen away, testing the 66 big figure, key reaction low from Friday in the offing, but obviously a move below that would just reopen the lows, basically 64.80. It certainly looks as though that selling it into strength is the way to play the Kiwi for now. So I wish you good luck in your trading today. Do not forget that I do have a webinar at 11 o'clock in the UK. And it's a trading webinar, and a lot of interesting topics going on at the moment that we'll talk through and look at some potential trades, and it'll be an interesting one. So join me for then. But with that in mind, I wish you good luck in your trading today, and I will speak to you later.